The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. 877-927-6648 is the number to call. Love to hear from you. Oh, this is very interesting. The E-mini is down 9.25 at 25.69. Potential peak after the Chapman wave at 25.80.75 and a Chapman wave 5. Haha. And that's the daily. The weekly is in a leg E/B. No new high today. That means that the whole of this week, if there's no high above 25.80.75, you actually make a peak. Whether it's a peak E or a peak B, we will make decisions later on. The MACD and stochastic and the weekly charts are still very good. As I said to my subscribers to my opening call in the 16, 17 charts that I sent out starting Saturday morning, I said, if it wasn't for the tax, the potential for the tax cuts, almost everything I'm looking at suggests that the upside now is extremely limited and that we should start on the daily charts, the digestive phase. That's not the weekly charts. They are separate. For the Dow, it would take a move under 23,000, I think about 250, and you probably have to close it at least 2 out of 3 days under that 23,270 level for me to start getting signals that might even impact the weekly chart. However, look at this. The 120 chart made that peak D at 25.80.75. You're now in leg C to the downside in the 120-minute chart. Let's get rid of this, and we'll start our little escapade here. Let's go to the Dow, INDU. The Dow is down 86 points at 23,347. Now, this is also very interesting. It's a little squashed. Actually, you can see it better here. If you go to the daily Dow without the MACD and the stochastic or the unbalanced volume, you'll see that it's just chop in a sideways rectangle move that started at 23,485, the all-time high peak F. I'm calling this a Chapman wave, potential Chapman wave 5. And in the chart that you see right here, with the MACD pulling back, but still positive, stochastic at 87%, pulling back, but still positive, and the unbalanced volume having made a new high and then pulling back, but also I would say kind of positive. What's really important about what we're looking at this particular stage is you see this blue line here. Let me show you something. This is a moving average, one line. It's a 7-period moving average. This is the first time the Dow is closed. Well, I shouldn't say closed. The day is young. This is the first potential close under it that we've seen in a very long time. In fact, let me move this across right here, and you will see that we've not been under that blue line right there since the breakout that was this low right here on the 5th of September. So if this is a move, and I consider we've actually we have an intermediate term long position, we do have a short position in the Dow. Well, if we are looking at this, it's really 23,285. That's the blue line. That's the 9-period exponential moving average. Here it's the purple line, maroon line, same thing. But one needs to see a close below that to even consider that there's been an arch rollover, number one. And number two, this gap on the 20th of October with a low of 23,201. Previous day, the high was 23,167. So that's about a 32 point gap. We haven't even filled that gap. It's been over a week, and we haven't filled that gap. So this is going to be very important. How do we fill the gap? If we do fill the gap, there's a good chance that we will go on to the IBM gap up of the 18th of October, where the low was 23,086, and the day before the high was 2,300. So that's an 86-point gap. So let's go one step at a time. Everything about what I was looking at said, unless there's some really amazing news about tax cuts that sparks a new buy in certainly in the Dow. This looked to me like it was in a topping phase, at least short term on the daily, not the weekly, just the daily. And therefore, we trade using this as a quick trade. However, when you're looking at the Dow weekly chart, the MACD is still very strong. The stochastic's at 98%. That is really strong. And so far remaining flat. The RSI, this is the red line right here, is turning down. If you're looking at target technician hour, if you're looking at the TFNN charts, you'll see daily, weekly, this is the monthly right here. Huge single leg E to the upside, just amazing move after that peak D. Just 2 bars, 2 months of consolidation, and then bam, straight up above it, breaking out in June, and we haven't looked back since, and hit 23,485 all-time high. I think that's going to be the high for just at least this particular phase until this digestive period is over. Let's go on. SPX, so the upside for the Dow, really strong resistance at the 23,390s, and support must hold at 23,280s. And then the next level of important support will be 23,250s. Now, 25.70 down 11 in the E-mini. This is a peak E. If there's no new high today, I can't see how there could be a new high today. I think we're making a short-term top in the daily. The MACD was very poor. Stochastic was very poor. On balance was very good, but overbought. So it's the weekly chart that's going to be very important. Same thing as the Dow. Let's give you parameters. Upside, it's at 25.70. The upside resistance is very strong at 25.78. And the support that must hold is 25.65. A break under that says, aha, now we've got our second, it's actually really our third close in 5 sessions under the 9-period moving average. That could be meaningful short term. Let's go to the QQQ. Spectacular move up Friday. Nice move to the upside. I said to subscribers, let me just tell you what I said to subscribers, because this is going to be very important. Let me go here. I think this will be it. So this is what I do on Saturday morning. Always I do an overview of the 3 time frames for the Dow, the daily, the weekly, and the monthly. I give a whole synopsis. I put in here what's happened up until now. The Dow is in a buy mode. The weekly is in a buy mode. The monthly is in a buy mode. That's separate to whatever happens after that, which is today. And what we're looking at, I go through the daily, I give you all what I discussed in great detail was the fact that the Dow was stalling, and yet the S&P screamed higher to all-time highs because of the Thursday. The Thursday action was very poor, but Thursday afternoon, you had Amazon, you had fantastic earnings reports, boom, to the upside. And that's what I discussed. I also suggest what to look for in the shorter term, and what we're looking for in all the different time frames, daily, weekly, monthly. Monthly is still very, very strong, as I said. Then I look at the Dow daily, and if I can even find it here, Dow daily. So that'll be there. So this is the Dow daily. I do a synopsis. I give a whole overview of what we're looking at here. What happened here? Oh, this is a 120-minute chart. Sorry. And I do that through the daily. There's the daily. So here's the daily. I discussed what we're looking for, and I said that at 11:10, if the Dow is minus 30s or more, rather than plus 20s or more, the chances are strong a negative close will unfold. Watch the index as well. So this is a whole synopsis, and let me tell you something very interesting here. Dow right now is down 92.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I had a couple of very good questions during the break. Some emails sent to me. So what is the count? So if I go to the E-mini continuous contract, it's a little clearer. This is a leg D and a possible peak D today with very poor technicals. That suggests there's a really good chance of testing the 2550s support, and if that goes in the next 2 days, that's going to be a big negative. The weekly chart, I had no choice but to put a down arrow, but this could turn out to be a peak F/B if there's no new high this week. In the weekly chart, the MACD and stochastic and RSI is still very good, turning down, but still very strong. I would have to say that as I'm looking at the weekly charts, if the weekly charts still remain very strong, the dailies could pull back quite sharply. The daily E-mini could still pull back to the 2537 area. Wouldn't do anything. 2536 is the weekly 9-period exponential moving average. So I'm going to call this F/B for now. I'm not going to make any adjustments to say, oh, I think it's an F, I think it's a B. I'm just going to leave it because I'm going from the daily, and the daily suggests that there's going to be a pullback. That's number one. Number two is that within the weekly chart, I could put a little inverted V-shaped pattern, you know, this little cap that I put in, when all the technical suggested that this was a peak E. The MACD was very negative, the stochastic was very negative, and it closed under the 9-period moving average in the weekly chart for 2 weeks. I had no choice but to put the down arrow. But there's another technique I use. I don't use it very often, but I've seen it so many times lately that I'm going to consider it. That what happens is if the price goes under the 9-period moving average almost reluctantly and then goes back after a peak E or maybe a D or an E, consider that it is a plus sign and that the next peak is going to be more serious. And that's kind of the way my bias is right now to look at it. But in terms of the monthly chart, look, a leg D, it looks very strong. Hope that helped you out. The next question was the IYT, which is the transportation index. Wherever that went to. Oh, I typed it on the chart. Nope, let's type it in there. IYT, which is the iShares transportation average ETF, leg E monthly. And I've got it as a 5 in the Chapman Wave in the monthly. But it's only a C. I don't know how I've spent so much time. Unless I make that a phantom peak right there and call this a D, I'm just leaving it as a peak C in the weekly chart. The MACD and stochastic's turning down, but still quite strong, 85% in the stochastic. It's a peak G on the 13th of October in the in the daily chart. And that was at 181, was that 181 something? 181.57 on the 13th of October. And there it is. And I'm going to say that this is probably a daily short-term. I've got a sell signal in place. And today's action probably confirms that it's a sell mode in the daily, not the weekly yet. So now let's go on. The QQQ. What I was saying about the QQQ is the NDX 100 went to 151s on Friday. It gapped up. Now, I had a question. Someone said to me, wait a minute, that's irresponsible to say that the Qs were very weak on my newsletter Friday. Of course, I did an abbreviated thing because I had just gotten back at about midnight driving through the night, so I had a chance to update everything. But what I did, I forgot to mention that I did in the little short piece that I wrote to say that Amazon, there were very good earnings. But the real issue here is that, look how bad it was on Thursday. It made a peak yield 149.21 on the 18th of October, pulls back to the 147s. No big deal, but certainly within the context of the market, it had only gone up since the end of September. So this was really a very big pullback in percentage terms on the daily chart. But then, of course, it gapped up. Now what's happened is today, I said, if it starts to close, if the Q start to close, the index 100 power shares start to close in the 153s, I have to say, I am wrong. And what happens is today it pops to 152.19. Let me make that a 19 right there. And now it's reversed. And I call that a peak E. This is like the Chapman wave, rogue wave. What happens is that you make your turn down with the negative MACD stochastic. You have every right to be short. And then suddenly there's a news event. I have it's kind of analogy. It's as if you're going to the beach and you see a sign that says high tide at noon. So at 12:06, you think, okay, the tide, this is it. The big waves are over. The waves coming up into the sand and the beach and the chairs, and done. We're going to be going down. I can go sit in my favorite rock at the edge and watch the waves and just read my book, eat my sandwich, whatever it is. Put my suntan lotion. I wipe my eyes, and the next thing I know, splash. I don't know what happened. Everything's wet. I look around. The tide's going out. That's a rogue wave. It didn't see the sign that said high tide at noon. And at 12:06, one wave just excoriated the beachgoers by wetting them all. And what happened? The tide is going out. And that's exactly what happened here. And we will know if by tomorrow at 151.08 right now, the Qs are trading under 150. I would say 150. Let me get my 120-minute chart out. 150.40. Trading under that, I suspect that we've made a rogue wave and then we're going to be coming down. But all that has to happen is you start to fill the gap and then other factors come into place. So that's it. Upside very limited right now. Downside is open to slightly lower lows and slightly lower highs, at least for this moment. Peak E/C will be, leg E/C in the weekly chart of the Qs, and the 120-minute chart did say it's a B. I don't know about that. No, sorry, B. Yep, it's in a leg B, but when you have a gap up, other things can happen. So this is going to be very interesting. We've got the IWM, which is the Russell 2000, not very good. Down $1.50 at 148.29. Peak E, sideways, lower lows, lower highs. In the daily, weekly chart has made a G and is pulling back. But until it breaks 146.30, that's like 2 points lower. This could just be chop, chop, chop sideways. All right. Now let's go to the NYA. Now, looking at Investors Business Daily over the weekend, the NYA advanced decline line was starting to turn down. It looks very much like the MACD and stochastic here, turning down. Made a peak F top at 12,443 on the 23rd of October. I think that the short term for the New York Stock Exchange is done. I think we're going down, and this is what's called the Chapman wave Roman candle. I probably won't remember, I'll try to give my subscribers a little more information on this tomorrow. But let me just make it real easy. At 12,321 right now, if the New York Stock Exchange trades at 12,313 for more than two 120-minute bars at any point this week, expect that the low of 12,280 will be tested very soon. Just make it as simple as that. Chapman Wave Roman candle off an all-time high, especially with a silent doji candle following on the 24th. This is something to take note of. Let's see what happens. Let's go to a break, I guess. I wanted to go to gold. I think gold has the potential here to start a little bit of a turn. I said to subscribers to my opening call this morning, I'm watching gold. I think it's about to turn, but it's the dollar that's going to give us the clue. And the dollar right now is at a peak C. I think it's going to make a D. And then we're looking for gold to have a bounce and the dollar to have a little bit of a raise.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hello everyone, Basil Chapman. We're back, Dow down 86, S&P's down 10. What I was going to say is that the dollar, the MACD is very strong. Stochastics at 83%. Good, not great, but good. But it's the weekly chart that's been strengthening very nicely. And my contention has been that there is enough evidence to say that the 35-week up and 35-week down pattern that we saw in the weekly chart of the dollar and the exact low, we got the day of the exact low along. I would like to see if it's possible to hold this position longer And it's the 200-period exponential moving average of 95.65 that's kind of the target. It only becomes a target if we can get to 95 into the high 95.20s. If that's the case, there's a good chance, even though that could be a leg D, there's a good chance we're going to get there. However, I am calling this a counter trend rally based on the monthly chart. Well, weekly and monthly, actually. But the weekly chart is showing enough strength that it looks as if any consolidation in the dollar, regardless of what gold does, holds the 93.50 to 92.80 level over the next 2.5 to 3 weeks, excuse me, there could, in fact, be another push to the upside. Right now, the dollar's getting a little bit stretched. That's why I think there's just one more pop to the upside. Maybe it won't make it. That's what I think it will do. Let's go to the EUR USD to show you the parallels. So here's the mirror image, down leg A, B, C. I'm calling this an E/C to the downside. I think there will be E/C. I think there will be a D to unfold. And look, it closed under the euro dollar, closed under the 200-period exponential moving average last week. I suspect that that's a tip-off to say that 1.17 to 1.16 will be the upside trading range, and we'll have to test lower down that 1.15 to 1.14. Yeah, maybe the low 1.15s is really the monthly chart is suggesting that's a possibility. And if you look at the USD JPY, which is the Japanese yen, this is the US dollar Japanese yen currency pair. I think this is a chance of an F pullback because the MACD and stochastic are sliding now, but it led us up. It was the tip-off for me corresponding to the rising price stochastic in the weekly chart to say that the dollar could have a really good rally, which is the reason why we went long the day of the low, 72-week low. But what was really interesting is that the USD JPY, the yen, basically has struggled to really hold higher. It wasn't really leading. It was doing well, but technically, I mean, in the MACD and stochastic. So, and the weekly chart has really not done very much. So the yen might start to linger just a little bit here. It should hold at 113.07. It should hold 112. Oh, somewhere around 112.80s, and then maybe rally to the upside. Let's look at copper. Copper had a big move to the downside, peak D daily, peak E weekly, and a leg D monthly, and it's a 3.10. I suspect that the copper has a lot of resistance at 3.1452, the 9-period exponential moving average, and that this little line here, the 50-period exponential moving average right there, look, that's the 50. This thing right here at 3.04, I think that that's going to be the target to the downside. Crude oil is up 10 cents at 54, leg C. I think just like the dollar, I think it's going to go higher. And we have a commodity index, which is, I would say there's a little bit more tied to the crude oil than to the other commodities. And it is very much like this. It's doing very nicely in a leg C to the upside. So I think we've got TLT. I haven't covered the TLT. My contention has been that the bonds, if the bonds start to rally very strongly, get back to the 125s this week or even higher, that would correspond to some kind of a pullback in the general market as money migrates from the from equities to the so-called safety of bonds. And we will then see if the VIX, which is trading now up almost a point, that's very interesting, VIX.X, now it's only up 86 cents. If it's able to, at all at 10.66 to get into the 11.60s, at the moment it hits the 11.60s, I think there will be further selling. But in the meantime, chop, chop, chop. This is the part of a process that I've discussed, a kind of a topping process based on the daily charts, not the weekly charts. So I think I've covered everything. I didn't cover. This is what the question was. What was the question? Oh, about bonds. So let me first, since this is the chart here, wood, iShares, Global Timber and Forestry ETF. I think it could be making a peak E today at 70.05, last week's all-time high. Peak E maybe. E/B in the Philadelphia Housing Index, up $1 at 317.67. It's still on a tear to the upside. And that has to do probably with rates. But here we're looking at the triple yield chart. See, it's pulling back. What I say to subscribers, let me tell you, I did a lot of work. I didn't do all that much last week because I was on vacation, but I did do my daily call. But I only 3-4 charts every single day instead of the usual chunk. But look at this. The bonds, I said that the 5-year was leading the 10-year. The 10-year was leading the 30-year. So the 5-year hasn't yet gone to the high that was made back in March of this year. In the 2.3, was it? 2.13 area. So it's trading now at 19.98, 1.998. So it hasn't done that. So this is going to be a very interesting week. Will bonds start to slide and again, and yields go up even higher to go to basically a breakout of the March highs? Or are we looking at TLT bonds moving higher, the Lehman 20-year T-bond fund moving higher? I think shorter term, that's what I'm looking at. Okay, couple of things that came up as questions. One leg up in the E-mini. I think didn't I just do that? ES? Yes, I think I did. So the E-mini, I went to the continuous contract, probably a peak D today. Still not a big deal. It hasn't closed under the 9-period moving average of 25.64. It's at 25.69 right now. But it's that weekly chart that's going to be most important, because if the weekly chart starts to see a deeper slide under 25.62, that's 7 points lower from here. Anytime this week, then you got to look at 25.37 as the 9-period moving average as a potential target to the downside in the weekly chart. Let's just go one step at a time. So I think we've covered almost everything. Oh, no, I had another question. Comp index. Okay, so the comp index, I prefer to the Qs, but I'll do the comp index. I'm calling this a rogue wave peak F. If there is a lower high bar tomorrow and a pullback on Wednesday, that takes it anywhere at 66.92 right now, with an all-time high today of 67.27. So it's 30 or 30-something points, 35 points off the high. If it closes under 664 at any point this week, I suspect that a short term at least top place. Really watching that very closely. That's the confidence. So Snap was a question. Let's go to Snap as we go to the break. Snapperoo. Oh, sharp move up. Oh, very. I'll be back. We'll talk about Snap.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
What about the first one was, what about, let me find it over here, Snap. So Snap is Snapchat, Snap Inc., Snapchat Online. It made a peak B and then pulled back quite sharply. I think it's going to go to a C. And this is a fascinating period right now because this is where these kind of background stocks start to do quite nicely as people are focusing on the major stocks, getting out of them, getting in them. The ones under the radar are the ones that start to move. So I'm going to say that, let's see who asked the question. So if that was Coda. So Coda, you're always looking a little bit longer term. So Snap, I would put into the category of yes at 15.88. I'd start a position. I'd like to see a little bit further upside action at 1650. I'd probably say to you, add a little bit more, but just start the position here at 1588. For this position, being that it's looking like a leg, D is going to come above the into the low 17, upper 16s in the weekly chart. I would give it a 1 point. It's a little bit much. No, I need at least for today to give it a 1 point stop. If it gets to 15, if it gets to 16.20, now if it gets to 16.30, you can raise that stop a little bit, and then you can start to consider whether you want to add, because I think it's going to make that leg, then it'll make that leg C above 1688. So that's Snap, and I would treat it more as a stock in a counter trend move to the general market possibility right here, that it could be independent. That's the most important thing. And I wouldn't get too carried away, and I'd be very strict and disciplined about stops. Why? Because if this thing takes out 14 support at any time in the next week, it's in trouble. Just make it real simple. Actually, if it even takes out 15, I'd say, hey, I don't want to. So I make the stop. In fact, I'd make the stop $15.15. There you are. Now, let's go to the next one, which is Plug. Plug stands for plug power or something. Yeah, Plug Power. Trading at 2.74, down a penny. Now, the person that asked me this is also looking at longer term aspects. This is a little different because it's got the peak D in the weekly chart already. It's got a peak E in the daily. It's only in leg B in the weekly. This is the way I would, it's at $2.74. I wouldn't get too carried away. I would suggest right here, 274, start. If you have no position, start a position. And let's look at it. Just a start a position. I don't even want to give you a stop because it's just even at 15% or 20%, It's it's like 40 cents or something. Yeah, I'm just going to have to do that. Start the position here, and I would 266 at 2.66. I'd start to excuse me, start to sneeze. Geez, this is tough. 263. Oh, it's easy. 274. Start the position. I would have a stop of 263. 262. I'm sorry, 262. Thank you, bless me. I just have that. And the reason why I'm saying that is the way it's acting here, slightly higher highs, slightly higher lows, it should, in fact, tackle the high of Friday of 280. And it should do that within 2 days. And if it does that, it should go to 283 very quickly. So that's the reason why I don't want to hang around if it makes the arch formation. I want you to rather make kind of a V-shaped formation to the upside. Okay, and this, I wouldn't, regardless of what the monthly and weeklies are saying, I wouldn't get carried away. I just start the position. I think in a week's time, we'll be looking at it, remind me again, and that might be where we get a little bit more interested or less interested. And if we're more interested, we're now looking at the weekly holding so well that it's saying that the monthly can extend higher in November. That's really what I want. And even though it's only $2.74, that could be 100% lost if it suddenly goes broke. So I don't see anything about going broke in the stock itself. It looks quite good for a stock that's trading at 274 plug power. Next question I had was, would I look at the JBHT? JBHT is in fact a JB Hunt. This is the trucking. The down move today, down 4 at 105.21. Down 4%. This has got that arch failure pattern. This is what's making me a little bit nervous about the market. I'm looking at some stocks that made their peaks, tried to rally, and the pullbacks that they're having within the rally are pretty sharp. And that says to me something's not right. And this one today says something's not right, even though it's a peak C, and I would think there'd be a peak D in the weekly chart. I think it needs time. Now, I'm not calling it a short right now. I'm just saying it looks to me like it's going to test the 103s to 102s, and if it doesn't get there, but in fact has an inside day tomorrow, and by Thursday it's actually trading at 106.71, I'd say to you, hey, that's much better action. So we'll just keep an eye on it. Let's see. Question. Oh, did I show the 10-minute chart? Yeah, 10-minute chart. E-mini went to a peak B minus. It's pulled back sharply. It's gone to a trough G. It's trying to rally at 25.69. I think that there's still some selling pressure, even though there's mixed buying, and that buying is isolated, which means that the overall markets are going to be a little bit top heavy, and rallies are going to fail. That's kind of what I'm looking at right now. So let me just say that the numbers to watch are a slide. It's at 25.69, the E-mini, a slide under 25.65, a close on any 10-minute bar under 25.65 would say to me, watch out below. We could have a very, very negative sell-off into the close. Okay. So now I want to, I was telling you about what we're doing here. So within the Chapman Wave methodology, I do on a Saturday, I show the 3 time frames, daily, weekly, monthly. Then I do a separate thing on the daily. Then I do a separate thing on the 120-minute chart. Then I do the overview, and I discuss all the different sectors. You see the 120-minute chart has a strong downtrend line resistance, and it couldn't break it today. It's pulled back. The VIX, I said, was a little low. It should rally. It's rallying. And we're going to be watching that closely. And then I had all these different charts. And when I say charts, let me show you something. This is my daily call. When you go to the opening call, you go to the front page, put in your password, and then you get to this thing that says the opening call by Basil Chapman. Click on the charts, and you can go. And you've refreshed them in one at a time. This is all the charts that came out, most of them by Sunday night. I added a few this morning, as always. So it's got the Traders Corner. It's got triple yield chart. This is this chart right here that's telling you about the 30-year that I was discussing earlier. That's white. The 10-year is brown. 5 is the cyan-colored one. And I said a break above that would be very positive, but I'm thinking that if the market is going to pull back, we might see bonds start to pull back as well. So, wow, if I do this, what happens? Close window. Oh, okay. So that took us out of that. Pity about that. Well, I'll come back to it. Basil Chapman, Tiger Petitions Hour. We'll be right back. Dow is down 76. It's down 9.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Jeffy Hunt, we just did that. So in this remaining segment, what I want you to do is this. I want you to just show what I'm looking at and why I'm looking at it. And the most important aspect, I mean, let me go to the weakest indice and show you even here. Look, even here, the price is holding very well in the IWM weekly chart. The monthly chart is still very good. The MACD is good. It isn't anywhere close to as strong as it was back in the beginning of 2017, but it's still very good. The stochastic's at 93%, and that is good. So it's going to be the daily that affects what happens all the way around. So the IWM at 148.12, down $1.67, down minus 1.11. This is the deepest correction out of these key indices. And that's going to be important. If it takes out, he has a Roman candle again. It's the same as the New York Stock Exchange. So if you go to the SMHs, that's the semis. Look, this is a little doji candle in a leg E. I'm suspecting, based on the weekly, the the MACD, the stochastic, and the on-balance volume, that the SMHs are really close to some kind of a digestive phase. Hey, I said that the other day. It was trading at 98. It went down to the 97s, and then it pops up to 101. So that could still be a digestive phase. The same as I said, 23,000 should be a very strong, resistance. And then if it's a support level, it's 23,000 to 23,000 to 22,800 would be very important support over the coming weeks. I still think that, but we'll have to see what happens here on the shorter term. So yeah, and the XLK, look at this, the XLK, just like this is the tech area, S&P Select Tech Spider Fund. Here we are, leg F. I don't know if these are recycled. I don't know if this would be F/A. Give me a break. I can't see this being an A right now. It could happen, but boy, that would be unusual. So just be careful. This is where I think that you can be selective. We have 6 long positions. They've all done really well. Some much better than others. And we've now got one short. To add a couple of more shorts if that's the case. So just be selective right now. I think they are getting choppy. It doesn't say crash, it just means choppy, meaning a digestive phase in the daily chart should be unfolding. That's my outlook. Have a great day. Stay tuned for Steve Rose and the rest of the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.